Good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Niraj Shah, and it's the cues are positive. Let's see if indeed the day turns out to be that way as well. Now, we didn't have any hangover per se from the US markets, but there's a very interesting chart that I saw which speaks about the dichotomy and the much spoken about dichotomy between earnings, economy, as well as markets. And look at this chart, which shows you how the stocks have posted the best quarter in years ahead of the worst earnings season 2008. The key is the markets are, and I know you will hear a lot of this even in India, wherein the earnings, obviously for the June quarter, April, May, June quarter, which begin on on July 9th with TCS, will not show a great picture. I think most people are writing that off. Most people will probably focus on the commentary that comes in from companies, both in the US as well as in India, because companies might be able to give some direction about how the rest of the year could shape up. So don't be intrigued by these charts. It's very important to look at these. But I think the markets in wisdom would want to look ahead, and that is what it will watch out for. Trying to look ahead, what are the cues looking like for today? Well, Asia, the markets that we know have started off on a positive note, so that's actually a good thing. We have the peripheral Asian markets as well as the Central Asian markets doing rather well for themselves in the session today. So the start is very, very positive. I mean, up about 2.4%. Kospi is up and about in the session today as well. So the going is very good. Brisk start. Let's see if this continues. The SGX Nifty indicates a start which is about 50, 55 odd points in the green. So the start promises to be good for the Indian markets as well. As I said, the key is, can we build on from there, or will we come off? Actually, it's strengthened even more now as we speak. So going is really, really strong. Now, I think, as I said, the trade setup seems to be that as we approach the Q1 earnings season, and in India, it starts off from this Thursday with TCS. There's a non-bearish undertone. I wouldn't use the term very bullish because everybody talks about how there might be a cap, but is there bearishness on the street? Certainly not. I think key monitorable this week would be telecom stocks, and the gain on Friday, both Bharti and Reliance Industries or Geo for that matter put on some gains. Can this be a continued leg up that telecom needs? That's the other question that comes to mind. And I think TCS earnings would hold the key for IT stocks. And if TCS delivers, then the market would want to believe that there are businesses which are resilient to this, and therefore that should be positive. But I think the focus today is the stocks to watch, and there is a bunch of them. There are a bunch of Q1 updates that have come in as well. I've chosen the ones which I think are the most important to me. I could well have said that HDFC Bank is the stock of the day. It could well turn out to be as well. I'm starting off with that, but my stock of the sector of the day is something different. But I'll start off with HDFC Bank. It's a near candidate for the stock of the day simply because of the update that it has posted. Look at this, viewers. At a time when we were in a lockdown and everybody thought that businesses are lost and asset quality will be terrible, so on and so forth, HDFC Bank had a 21% YOY growth in the advances and a 25% YOY growth in deposits. This is not ordinary. This is good even in normal circumstances. The fact that it has been able to do in a lockdown period is even more clearly shows the flight towards safety. You could argue that QOQ CASA has dipped a little bit, but 40% is not bad. Yes, other banks have a higher CASA as well, but I think the deposit and the advances growth is strong, and it shows the resilience of this brand HDFC. I reckon that this run up that we've seen in HDFC Bank will well continue. Let's wait and watch. Take the bank nifty up along with it is the key question, or not, isn't it? But a good number. Sobha. Now, the reason why this is important is because their language is a bit deceptive to my mind. They have said that the company's clocked in 70% of sales volume in Q1 versus Q4 FY20. But if you look at what these numbers actually mean, which is I think 4,55,000 square feet odd, the Q1 volumes are down between 45 to 50% versus last year. So the number is not actually all that great, even though Bangalore is a resilient market. Now, it may well happen that the market will believe that these numbers are better than what the markets were anticipating, and therefore it's a positive because, frankly, which real estate company has had sale? Hardly any, right? And therefore, to do these numbers as well is pretty commendable. I think remains to be seen. In a bad time, something which delivers better than estimates could be considered good. Keep that at the back of your mind. ICICI Bank, the board meet is scheduled on July 8th to consider fundraising. And I think this is important because ICICI Bank is raising money after for the first time, I think since 2008, if I'm not wrong. And they're doing this not because they need to, but because they can. And a lot of franchises are doing this, right? Raising capital for the times ahead, be it for a rainy day or for growth. And therefore, I think the street should view this positively. The date is scheduled for day after tomorrow. Let's wait and watch what happens to ICICI Bank today. Edelweiss, they reported the first loss since at least 2008. That's the data that we have. We don't have the data before that on a quarterly basis, but since 2008, they've not done a quarterly loss. The first time that they've done a loss on account of higher impairment costs, not the best of numbers, I would reckon. The impairment cost is at 2,039 versus 102 crores. They are in talks to raise about 1,000 to 1,500 crores of equity capital in the wealth and asset management business. The deal is expected to be finalized in the next 6 to 8 odd weeks. So watch out for Edelweiss in the session today. That's the stock I'm talking about. This one could be an interesting one to monitor in the session. So it's had a good run. It could well have a bit of a pullback. I think the sector of the day or the stock of the day or a combination of both could be fertilizer stocks because of this Q1 update from National Fertilizers. We usually scoff at what fertilizer companies and stocks could do. They have achieved the highest ever sale in quarter 1 FY21. Uh, the Q1 FY21 sale, that's what the graphic is trying to say, is about 21.5% higher versus Q1 FY20. And that shows how strong the quarter was for National Fert. And I would reckon that will be the same for all the fertilizer companies. So do watch out for National Fertilizers as well as the fertilizer companies. These could well be the stocks that you should watch out for. Last but not the least, just want to end with what Marico is doing on the stocks front, at least. Their India business clocked in above average annual monthly sales numbers. There's a volume decline on a YOY basis in low teens because there was a skew in revenues last quarter. But Macquarie's update on Marico is interesting. They believe they, of course, maintained the outperform rating with the target price of 367. They believe that Marico can gain disproportionate market share in the current environment and is one of the top picks and part of the India-focused top 10 list as well for this one. I would mention to watch out for e-clerks. There's a buyback need today and Fortis because there's a case today. And if the Supreme Court rules in favor of the IHH open offer, then Fortis will have a significant up move. So keep Fortis at the back of your mind. Last but not the least, just want to leave you with this update. For a long time now, people have been talking about how Warren Buffett is not putting his money to use. Well, Warren Buffett has finally found his next crisis era deal. Berkshire Hathaway, which has stayed relatively quiet during all of this coronavirus pandemic, has announced its biggest acquisition of more than 4 years, which is Dominion Energy. I I just want to say that Warren Buffett would not make an acquisition because of what the market conditions would be, but because it fits his investment checklist. So keep that at the back of your mind. Don't think of it as Warren Buffett's signature on the bullish undertone on the markets. It's more an acquisition specific move that has happened, but it's a big thing. And I think it stood out for me. Thanks so much for tuning into the Trade Setup.